Welcome to the Mining Store podcast, Australia's #1 crypto mining rig solution provider, covering the latest news and insights into macroeconomics, cryptocurrency markets, altcoin news, and technical analysis. And now, without further ado, let's hand it over to the miningstore.com.au team.
All right, guys, welcome back to another market update podcast by Mining Store. Today we've got a full house again. We're going to be going through a really similar structure to last week. I think we found our groove with that. We're going to get Taylor to run through some community questions that we've had coming through, and we encourage everyone to keep sending those through. It's great talking points that we can have as a group, and obviously answering our audience question is what we want to do mostly. After that, I'm going to personally jump through and run through a bit of what we've got on stock for miners at the moment. We've actually got some of the lowest prices that we've ever seen in terms of mining hardware. And there's some really interesting points that we want to cover in terms of how to calculate real mining returns, which is another question we've had from a lot of people. Following from that, we've got Tony who's going to go through a global market update, running everyone through what's happening across the board there. And then it'll be followed in by Mitch, who's going to run through the general Bitcoin crypto update and what the market's doing there. And forgot to mention there also Theo is going to tap into the mining market after I speak a bit about it too. So I might hand over to yourself there, Taylor. Do you want to run through some of the questions that we've had from the community?
Yeah, perfect. And as Will said, keep sending them in. It's always good to talk about, what you guys want to hear. So we've got one today that I think, probably Theo and I have heard quite a bit over the last sort of few weeks, and that's, with the BTC price dropping, people are sort of waiting to purchase a miner because it might get cheaper. Paul, one of my clients, has asked, do we think that the price of miners will get any lower irrespective of where BTC's price goes?
Yeah, it's a great question. I mean, the thing that you want to look at when you get these types of questions is how much does it actually cost these manufacturers to produce a miner? Obviously everyone's got to make a profit in the businesses they're running. And right now, I dare say that they're pretty close to their cost margins. I mean, they're getting sales through the door. People are still expanding. It's not the expansions rates that we were seeing during the bull market per se. But we are kind of at the lowest price that I would see. Sure, if Bitcoin for some reason dropped to drastic lows, another gets to $15,000 or $10,000, they may even sell at loss just to clear out stock. But I really don't see that happening. Right now is lower prices than we saw before the recent bull market that we had. So it's definitely the best opportunity.
Yeah, I was just going to say that it's basically the same pricing as what you see before the bull run. So if it were to come down further, it wouldn't be by too much more. And considering most retailers don't have the purchasing power as what they would for like an institution. So the reality is for a cost per a separate, like a single unit up to 10 to 20 units is virtually what you're seeing now. And I think by doing so, if you consider that the prices of most miners have come down and there's not that much room for them to come, as you've just stipulated there will that the Bitmain and that obviously have a cost to actually make those machines, and I'm pretty sure that they're thereabouts.
100%, yeah. I'm going to go through in more detail, once I jump in the miners that we have on offer at the moment, how much they are costing, how long you may see a return on investment of those, and how to actually calculate those mining returns. So we might move on to the next question there, given we've got a good segment at answering a lot of the rest of that question anyway.
Perfect. So the last one I got that I thought was quite interesting, just because it's a bit different to everyone. If you had $100,000 in cash, what would you do right now with it?
It's a great question. Does someone else want to answer?
Yeah, I've got it. So the thing that you'd probably, and what we've seen in the past, especially in the last week, has been crazy. Like we're getting very busy. A lot of people were considering the hydros. That for us, we've got three main options in the US, being the hydros, the S19s, and obviously now the S19 Pros and Js. If you look at it from a cost per terahash, it's going to be the S19s Pros and Js by far, just because of the cost of them being quite low per terahash is far greater. So we're seeing a lot of our big clients move towards that option by itself. Not to say that the hydro is actually not any good. If future proofing your equipment for for the next cycle. But in saying that, the efficiency, if you look at the efficiency, and this is something that Cal sent me there, and I've been mentioning it to everyone over the past week, is if you look at the S19 Pro cost per, it's about 29.7 watts per terahash. Then you go to the S19J, 30.5 watts per terahash. And then finally, the Hydro is 28.7 watts per terahash. So they're virtually all on par with each other in terms of that efficiency piece. But because the cost of the S19 Pros and Js are so low, a lot of people are going that way, So I would say if you had 100,000, which I think Cal and many people have come through, there was someone that had like 200 grand. Instead of getting 20 XPs, he's gone and got 40 S19 Pros. So if I had 100 grand, I'd do it. I'd get the 20 S19 Pros.
With 100k as well, with 100k, you can actually get yourself 20, like Theo said, 20 Js. That's going to mine you over 3 Bitcoin a year as well. So, over the next, at today's rate as well. So if you've got that coming in over the next 2, 3, 4, 5 years, obviously the halving event as well, the amount of Bitcoin you're going to accumulate is obviously a huge amount at these prices.
Yeah, absolutely. Yeah, I mean, I think the other indicator to put there of like how good of value these miners are at the moment is those larger clients of ours starting to really take advantage of these prices. We saw a $500,000 investment come through not just long ago, about 3 or 4 days ago. Someone that it bought, just before the bull run. He's obviously timing his investment quite well. And he put that through recently. So it's good to see these numbers coming through. It shows that not just us are looking at it as, okay, this is a really good opportunity. You're starting to get your more sophisticated investors jumping and going, yeah, right now is where we want to start expanding. So great question. The only thing I would add on the end there is probably it's always good to diversify. There's no harm in just buying a bit of Bitcoin and Ethereum as well. Maybe, get 20,000 of Bitcoin and Ethereum, get 10,000 of some, small cap coins if you're part of the trading academy. Make sure you're spreading out as well. You don't just have to go full into mining. That's definitely how we've had probably most of our successes over time. But the trading side is obviously a massive part of it too.
Or even also on top of that, the other thing is, like now that I think about it, you're right, maybe 80% goes towards if we were going to miners, ASICs, and then you could buy a KD Max for 20 grand. It was worth 75 grand about 4 months ago. The payback period on those is about 11 months, and that's at an 80% correction on Cadena. So I'm actually speaking to a number of people that are considering getting those units for that, because even Cadena is down 80%, and the fact that the unit, it can be paid back in 11 months is insane. I've got one Matt Stravis. He's actually considering selling some of his cars for it, but that's up to him.
some different approaches going around there. So that's awesome. I mean, on that note, we may as well jump in. And first of all, again, thanks heaps for the question, guys. It's we love it. We love answering it. It creates good conversation between everyone. And as we say, answering your questions is the main point here. So on that note, since we're on the topic of miners, what I might actually do is just run through a couple of things that I've been wanting to run through, and I'm just going to share my screen here now. So give me 2 seconds. Alrighty. And I'm going to jump over, just first of all, the best way to stay up to date with our mining updates is to go onto the home page of the Mining Store website. When you're on here, the first thing you see is signing up to our weekly newsletter and mining report. And by signing up to that, you're going to get 2 things. First, you're going to be getting all of our notifications which come through for our mining catalog. And that very clearly outlines what miners we have available, what price they are, how much their power draw is, everything like that. And on top of that, you're also going to get any major updates. So you'll get Tony's weekly update from Mining Store, which comes through outlining in more of an email format how the market's performing and a little bit about the mining market as well. And what I actually want to go through now is to show you a little bit of what that mining catalog actually looks like. So When you download the catalog from the email, you'll get a very quick summary of which miners we have available. Right now, as we've just mentioned previously in our chat, we've got the Hydro miner, which is a 198 terahash miner. We've got the Bitmain Ant miner S19 Pro. We've got the S19J, and we've also got a selection of Watts miners and Avalons as well. So this is definitely the best place to be updated on the pricing of miners, what's available, and we only really put in here miners that we would recommend and miners we're actually expanding with ourselves. So it's a great place for you guys to start, and yeah, it gives you all the information you need. Now, once you've kind of downloaded this report and you can have a look at the different miners available, what I want to run through with you guys is how you should actually be calculating your mining returns the proper way. It's a very different investment to a normal investment, and it is a little bit harder to calculate profitability and return on investment. But some main pointers that I want to run through, and I'm going to use this calculator as an example. A lot of people get sucked in when they first start mining, that they look at what Bitcoin's price is today, how much Bitcoin they're mining through their miner today, and if they sold that Bitcoin today, how much money they're going to get in Australian dollars or US dollars. Daily returns is not the best way to look at miner profitability. The best thing that you need to consider is how much Bitcoin am I going to mine in a year, and at what price do I want to try and sell that Bitcoin at? Now, you can be as conservative or as bullish as you want with that question. You don't have to try and target selling Bitcoin at 500,000 a coin and you're going to wait 6 years or 5 years time to do that. You can sell it at $40,000 when Bitcoin's at that price, or you can try and sell it at $60,000, which is what its previous all-time high was. So in this example, personally, with my own mining operation and what I've set out, I only at the moment want to be selling my mined Bitcoin at $60,000 a coin. That's the previous high price that Bitcoin reached, and I have confidence that in the next 2 years, maybe even less, that Bitcoin's price can get back to that price. So I'm happy with selling it at 60,000. So for this example, that's what I've used. If you want to base it on selling daily, you can do that, but I highly would suggest not to do that. What you get here is a little bit of a summary on the screen of what that turns out to be. So based on the S19J, which as Theo mentioned before, is one of the most profitable and efficient miners we have right now, and based on the 0.8 kilowatt hours electrical rate cents, so 8 cents kilowatt hours, you can get an estimation of what you kind of would be profiting per day if you're selling your Bitcoin when it reaches $60,000, okay? Now, based on that, you get a bit of a summary here. And as you can see, annually, you're earning in profit after your power bills, based on selling your Bitcoin at $60,000 that you've been mining, you would be accruing around about $7,539 US dollars. And I've done a quick little calculation for you guys. That's around 10,900 Australian dollars. Now, if we revert back to our sheet before, as you can see, the miners that we're recommending at the moment are these S19J miners, and they're selling for $5,750 right now. So that's why we're kind of saying right now is the time to expand. What you can be looking at is purchasing one of these miners for $5,750, holding the Bitcoin that you mine with it for the next 1, 2, 3, 4 years, only selling it at $60,000, and based on that, you should be returning around about, well, this figure here, $10,937 until the halvening, okay? So won't go too much more into the mining side of things. We obviously got a lot more to cover in this update. We had a lot of questions from people just talking about, is mining profitable? How do I calculate it? What are the main things that I need to be looking at? And those are the best ways to do it. So I'll put a link to the website, obviously, in this podcast. You can download the newsletter. But as I say, we've got plenty to cover, so let's jump into it. Theo, do you have any other further points that you want to cover on the mining market whilst we're still there?
Yeah, just to reinforce some of the points of what we've already spoken about, the fact that the price of the units had come down just at pre-bull run 2019, I'd say, and also matter of fact that the actual hash rate is starting to stabilize around that sort of 200 exahash, and it's sort of been ranging around there for the past, two months since the sort of sell off down to about 194 exahash. The expectation to heading into the end of the year is to still hover around there, or even the maximum people say to getting up to about maybe 200 220 exahash, far less than what people were projecting. That people were saying, there was some outlandish stuff for being at 350 by the end of the year. I think that was the problem with, in any bull run or any bear market, people are, they go too far in the opposite direction. So keeping a more of a good standard would be around about 220, I'd say, heading into the end of the year.
For sure. That's really good. That's a good point to raise there. Mitch, I think at this point we can probably hand over to yourself to share your screen. And Tony, do you want to kick off with the economic update there?
Yeah, sure. So, I think last week we highlighted the dollar index that was picking up a bit of momentum from support initially. So there was, I guess, some conflicting comments coming from the Fed minutes or the FOMC minutes that were released last week. So some of the Fed members had tilted towards the dovish side, which was highlighting that the Fed may need to pause the aggressive rate hikes in the future. But other members were saying that there's still a lot further to go. So really some kind of like conflicting messages coming from the FOMC minutes. So I guess this week, all eyes are going to be on the Jackson Hole meeting where Fed Chair Jay Powell is going to be speaking from Thursday to Saturday, giving some more indications as to where the next interest rate hike is going to be. Now, if we take a look at the S&P 500, there has been a breakout from that falling wedge structure, which is a bullish technical pattern. So a falling wedge generally means higher prices on the breakout. But what we've now seen is the S&P has tagged a major negative trend line resistance, which is also the 50-day moving average. Now, if we take a look at what's happening, under the surface, the bulk of the orders coming into the market has been short covering. So these are institutions that are now covering their short positions in the market, and they've reached kind of extreme levels. So not only has the S&P 500 tagged that kind of key resistance line, I guess it's kind of a do or die level. If we're going to confirm a bottom in the market, the S&P 500 needs to close above that technical level. Otherwise, there's a possibility of this being like a dead cat bounce or a bear market counter trend rally. Because what institutions may start doing is start to unload their short covering positions. So yeah, we're kind of at a do or die area. I guess the dollar index is also at a similar turning point as well. It's still in that rising channel structure. If the dollar index continues moving higher, that's going to put pressure back onto risk assets like cryptos and indices as well in the US market. So yeah, kind of a reflection point. We should know more next week coming out the Jackson Hole meeting. And I guess whether or not we're expecting larger rate hikes or smaller rate hikes in the coming months.
Great update. Thanks, Ace, for that, Fez.
Yeah, I'll just add on to that, Fez. Yeah, I think here I had an article that said, there's about, at the moment, there's about a 56% chance of a 75-point basis hike. And then about a week ago, there was only 39%. So it seems that sentiment is kind of slowly shifting, but yeah, we'll have to wait and see. Thanks,
they will need to kind of dial back at some point. It's just a matter of when that is.
Yeah.
Now, if everyone on the newsletter front, I did send out a quick email last week about the average Bitcoin bull and bear market, and I highlighted that the average Bitcoin bear market bottom takes place generally around 401 days prior to a halving event. So that would indicate kind of March 2023 is the bottom. If everything remains the same. So that kind of indicates that we could be creeping lower or consolidating over the next couple of months, which may also align with the Fed interest rate hikes as well. So when they do decide to kind of ease back on the aggressiveness on the rate hikes, that may align with a Bitcoin bear market bottom as well over the coming months.
Yeah, I think as we've been covering, every kind of week now, everything seems to be lining up to that around about March period. Next year that we should see a bit more strength in the market. But nevertheless, take advantage of the opportunities now whilst they last. So, all right, handing over to yourself, Mitch.
Yes. I'll just quickly go through yesterday. Probably a lot of people saw, but the Labor government, the Albanese government came out and said they're officially going to be token mapping. So what this essentially means is I think what a lot of regulators and a lot of countries go wrong is they're trying to regulate cryptocurrency without actually understanding it. And I'm actually liking this move by the Albanese government, is they're admitting like we need to actually understand like what these tokens are, what the technology is, before we even try and tell consumers what they should be doing with it. And at the moment, they're proclaiming they're the first country to do this, and I think they are. I know the US obviously have come out with their regulation stuff this year, and they want to study the market a bit more before they heavily regulated as well. But yeah, I think this is really good from the Australian government, because of course over-regulation isn't what we want, but for this market to move forward with institutions and retailers and whatnot, we really need more regulation. So I think this is a really important step for cryptocurrency regulation, not only in Australia but globally as well, because hopefully a few countries see Australia's lead and then follow. So it's good news in that department. Here we just have some other general fundamental points. El Salvador's working on some plans for distressed Bitcoin lending companies. I'm sure there's a few there that went underwater with how deep they went in on Bitcoin. And yeah, there's some other stuff there. So that's actually a pretty important one. Samsung Securities is apparently launching their own centralized cryptocurrency exchange. Samsung have been involved in crypto for a bit now, so as a tech company, so it's good to see they're further getting involved. And yeah, we'll move on to the technical stuff now. For our members, you guys have seen these charts a fair bit, but and even on the podcast. So I know the bear flag, the rising wedge we've shown for kind of the last 2 or 3 weeks, I reckon. Just kind of reiterating it and annoying you guys with it, because eventually you got to wait until they play out, and they actually have. First, we'll just cover the DXY. Obviously, most people have the understanding of the DXY, but for those that don't, it has an inverse relationship with Bitcoin particularly, and crypto as an asset class. More often than not, when we see the DXY improve and increase, you usually see crypto come down. I think from the end of last week, or me and Taylor were even discussing about a week ago when it was 105. How good is this? We showed you that parabola being broken, and it came down from probably as high as like 108 down to 105ish, that key resistance, that key support level. And yeah, I kind of drew this descending channel that it's been playing out in. I drew it at the bottom here, and we've kind of seen it retrace up towards the middle of it, at that middle line. So yeah, I think a lot of people now are waiting for this 110 point as a key point of resistance. Like, what are we now? That's almost 109 pretty much. So we're almost already there. Like, it's just daily green candle after green candle. So yeah, I think the China movements have a lot to do with this. Obviously, there's a lot of external factors that are strengthening the US dollar, but yeah, it's just something to always keep an eye on. And I think, last week when we went from, what was it, 25k down to 20.5k, I think the DXY is probably a nice indicator as to what happened, because look how bullish the DXY is and look how bearish Bitcoin's been. The inverse relationship is clear. But yes, moving on to Bitcoin now. We had a rising wedge that we sent out many times. We went through the order blocks pretty quickly, a lot quickly than we anticipated. But yeah, as you guys know, the rising wedge, it's a technical bearish reversal pattern. Usually you kind of work towards that apex before reversing. We reversed a bit quicker than anticipated, but you can see that kind of play out, and that second order blocks found a lot of support. And I think that's probably, between the 20.5 to 21.5 kind of area, that $1,000 area. And it's finding support there right now, Bitcoin, which is important. But what remains to kind of be seen if there's that more harsh downside move that kind of people are expecting, particularly with the bear flag. Like, we've been sending out this bear flag, I reckon, for over a month, 2 months, as it's slowly just been playing out. And yeah, as you can see, we might be a bit blurry on the video, but we literally wicked and perfectly touched the upper diagonal of the bear flag, and you can see the result as to what happened. We literally perfectly dived, and I was thinking, is this the moment that we wick really low and retest those lows? But it caught that leading support diagonal at the bottom and perfectly wicked it and bounced off. And it's been consolidating at the bottom of that there. So Yeah, it hasn't had that eventual breakdown, but it's still something that you guys need to be wary of, because if we do lose that line of support, things can turn ugly, and that's when you retest the lows. Because as we know, there's not a huge levels of support resistance between probably 20.5K down towards 18 or so. So just something to keep in mind. But and I just want to kind of say, because the next few things I'll talk about, we'll talk about March as an area of the bottom. And we've said it a few times on the podcast, we could bottom out next week, but trade that bottom until March. It's not we reached the bottom in March and then we're going up from there. It's like, we could trade here for a few months. Like, we've already traded at this area for 2-3 months since June or July, I think. So just something to keep in mind as well. But just moving on, we had that high, low pattern that was consistently playing out. I thought we might have printed one more towards that 26K area before it kind of stopped validating itself. But yeah, we did invalidate that. So I thought I'd just point that out because we've shown this chart many times. And then I just wanted to find this really good. I just want to show this really good image of a Wyckoff accumulation. Because, I just do want to say that, like, adding on to that March thing, we've got those buy orders and DCAs in place. And I know a lot of people, when they probably see this rising wedge or they see the bear flag, they're saying, oh, well, why do you, it's just like you've got a bias that you want it to go down. It's not that. It's just kind of what the charts are showing. And this is why we have buy orders in place on majors and alts. So in the case that, we do experience the pain of going lower, that we're at least, picking up things at the right time and, making the most of it to have handsome returns in the future when we do make a run. But I think a good way to describe this in a bullish sense is this Wyckoff accumulation. I want to show, you can kind of see, most of you probably know how Wyckoff works. This is the image up here. It's kind of pointing, are we here in this start one accumulation phase now? And then I kind of wanted to point out that spring below there is that, maybe that is that retest of that low before we spring upwards. Maybe that is that wick that, goes down and retests what we've been talking about before we go on that run or before we start trading, a fair bit higher. But yeah, of course, these aren't perfect. They are just a trading pattern. They're not 100% certainty, but, still a good thing to keep an eye on and have a bullish medium to long-term view that, even though we retest those lows, it's all for the better. And I just wanted to kind of show that on a total market cap. I sent this chart out ages ago to you guys, or to our members at least, where I show wave 4. We were kind of working our way up. I kind of drew this when we were about here. And I presented the idea that, to look at this as a total market cap idea, if we do retest that low and fall a bit lower, we would fall to that 2018 kind of support area that's provided before going on that bullish move. And, this falls in line with the bear flag, with the rising wedge, with the Wyckoff accumulation as well, if we do just get that last low grab. So I thought I'd show that. And then, just lastly, very similar to Bitcoin, I won't go on too much about this, but you guys know how Bitcoin and Ethereum trades in unison a lot. So both were developing a pretty nasty rising wedge, and you can kind of see it played out the exact same as Bitcoin. We kind of have that 1580 support line that I've been showing for months, and we literally just dropped straight to that and kind of been trading around there. So as for short-term movements, I think at the moment it's probably anyone's guess. I don't have a chart there. I did tell members that there's a golden pocket just below at 20.2 to 20.4K. All we really did was retest that July low, and then we've kind of bounced from there and found really good support from there. But, if we do fall lower, you can expect to probably test that golden pocket, or the 786 Fibonacci level is actually at 19.2K that we've wicked down and used as strong support. So I guess that just shows you need to kind of prepare yourself for anything. We could bounce strongly from here. We could test those Fibonacci and support levels, but yeah, just be prepared for everything. But that should be it today, technically.
That's good.
Yeah.
Great update. Well, thank you very much. And I think, is there anything that anyone else wants to jump in before we finish up for the day, or are we pretty much covered there?
If you're interested in getting miners again, we've got for the US S19 and J's the online dates, the 1st and the 2nd. So if you want to get in that batch in that window, then definitely reach out to me or Taylor or anyone in the team.
Yeah,
Yep.
there is limited stock of these left as well. So for the hydro miners, I think we may have maybe only 11 or 12 of those actually left. So if you are interested in those, you need to get in as soon as possible. And as Theo just mentioned, there these S19J and S19 Pro, which we went through earlier in the podcast, they're coming online on the 1st to the 2nd of September. And we have limited stock of those. Once they actually go online, they'll probably all gone. So lowest prices we have ever seen. We've got our biggest clients, taking advantage of these, if that gives you any indicator. But other than that, guys, hope you're enjoying the podcast, and we'll see you next week.
See you later.
See you guys.
Thanks, guys.
See ya.
Cheers.
Nice lads.
Nice.
Stacked episode.
Slick, boys. That was good.
Yeah,
Nice
that
update,
that
Mitch.
flows really well. Yeah, nice update from everyone.
How long was it?
Let me just stop it.